Why is this happening to the degree it is, as we've discussed on numerous occasions? Yeah. Is it overdone? At times you've said yes. Yeah. The last time we were together, you said something like 90% of the companies, the software companies that were down the way they are, deserve to be. Right, those, I think, were your exact words. Where are we here?
So when you and I were together on January 6th, I said you have to understand the difference between earnings and revenue and stock price. Okay? And what's happened in software is hard for people to get their head around because the stocks have been cut in half. But that's not what the market is discounting, Scott. The market is looking into the future and saying, in the past, 3 years ago, I could buy 35 years worth of Salesforce's free cash flow into the future. Give them 35 times free cash flow because I had that level of predictability. It was like a government bond. It was a sure thing. You definitely were going to get those. And then we have AI do what AI's done over the course of the last several months. And people just said something very rational. I can't see as far into the future. So I'm going to pay less for the terminal value. I'm going to pay less for those future free cash flows. I'm not penalizing them because they're missing their numbers today. I'm just putting it in the too hard bucket because I can't predict those future numbers. So the only way that reverses, Scott, is those companies have to accelerate their core revenues and show that they are beneficiaries of AI. The companies that do that, Databricks is accelerating their core revenues. I think this quarter they grew over 60%. Snowflake, ClickHouse, these are companies that are accelerating their core revenues because AI relies on them. I think they'll do fine, but application software where I can't see into the future, they're going to have lower multiples.
I'll tell you, this week was especially acute in some of the moves on the news of this updated tool from Anthropic, right, which you're an investor in. Of course, that speaks to me of the marketplace and the investment community doesn't necessarily know, even yet, how to assess the level to which software is going to be disrupted and by whom and by how. And even a simple, what appears to be a simple update or an upgrade from an Anthropic causes software names to go down. It causes private credit names to go down because they're exposed in their loans to software businesses. We're still trying to get our arms, it feels like, around this exploding technology and the impact it's going to have.
Right, and it's exponential. The rate of change, the rate of improvement of these models. We had a step function improvement in the first or second week in December. And now we just had release yesterday, OpenAI 5.3 Codex that we'll hear from Jensen about. Another big step function. So when you're in the middle of exponential change, investors just say, hold on a second, fog of war. I can't predict 35 years into the future of those free cash flows. So I have to pull it in a little bit. The stock price comes down and people say, hey, why is the stock price coming down? They're not missing earnings. They're not missing revenue today. But I'm telling you, that's why. Because investors have a much harder time, giving them credit for what's going to happen in the future.
I feel like